The news about what China is going through right now is already scary enough. And guys, now the fingers are pointed towards the health of world economy. A global financial crisis might be in its making. So will China take down the global economy along with it? We might be opening a Pandora's box here, but the time has come where we have to give this issue a closer look. A recession or economic crisis in China can very well affect the global economy, but the actual question is, to what extent? Is it an inevitable effect which we can sustain, or is it going to take us all down? We are going to take a deeper look in this video. So this situation is well anticipated and discussed by many analysts for several years. Analysts have opinioned years before that there will be a crash going to happen in China, which will be triggered by a borrower default. This will lead to money crunch in banks and more borrower defaults. The banks will pull back from more lending and there will be more liquidity problems. This snowballs into something similar to the Lehman crisis. If you think again, you must be already realizing that this is exactly the situation which is unfolding in China right now. The predictions are coming true. Evergreen is the world's largest indebted real estate property developer with more than $300 billion liabilities over it. It is at the tip of a crash if the government is not bailing it out. Following Evergreen, many other developers have defaulted, which is showing a slowly progressing systematic crisis. For China, this is as damaging as anything can be because China's GDP is heavily dependent on the real estate sector. Around 30% of the country's GDP came from real estate in 2016. This was not the case before. In 2000, it was just 10%. Today, the whole real estate sector is worth around $60 trillion. Even with this big of a real estate sector, China's economic crash will not affect the world as much as we think. But you must be thinking why? Because China is in a different context with the same story. A story similar to Lehman Brothers. The difference is that Lehman had a chunk of offshore investors. So the effect it could make and it made in the global financial market was huge. The default from one company led to a global financial crisis. At the same time, Evergreen is not as entangled with the global market as the Lehman Brothers. Out of $300 billion, only 20 belongs to offshore creditors. Considering the size of Evergreen and the impact it can make in Chinese economy, this is a low percentage for the world. So there won't be an immediate steep crash happening in global economy because of Evergreen, or we can say China. However, a slow and deep recession can happen in China, which can cause some effects in world economy as well. China is the country in number one position in terms of the manufacturing. Its global manufacturing output was around 29% in 2019. To be honest, the crisis is already here. China is actually slowing down these days. In 2020, the country's economy had shrunk 6.8%. This was due to the pandemic and it was the first time a growth shrink was happening since 1976 in China. To nobody's surprise, China's economy bounced back in 2021, that is this year. It was one of the first countries whose operations were restored so fast after the pandemic. However, as we talk, we all know what's happening in the Chinese economy. The property sector crash triggered by Evergreen and the huge Chinese debt, along with the ongoing energy crisis, is cooking up another slowdown. So the general fear is that will the problems in Chinese economy bleed to the world economy and will it cause another global financial crisis? To answer this question, we need to understand about what China actually is as a country. China has a highly centralized system which has proven over and over again to maintain the country's economy with its rash inputs. To see an evidence from history, we can check the events which happened in 2015 when the Shanghai stock market crashed. How did China handle the situation? The CCP infused 200 billion yuan into the stock market. This devalued yuan against USD. The CCP had a bigger plan than we think. This move was beneficial for China in one way. The exports from China would become cheaper and will be more attractive for the world market. This did work even though it had another repercussion. The global economy was shocked to see this move. They understood the volatility happening in the economy. This made a lot of investors pull back from Chinese investments. China had to face billions of dollars loss by this one step. However, this pullback was not a big deal compared to what China achieved through yuan devaluation. They, in fact, bypassed a major economic crisis right there. Currently, the crisis is essentially a liquidity problem. That means banks are losing their capital. They don't have enough money to run the institution. When the deposits are less, they can't lend to businesses. Thus, the main income source of banks, the interest from lending, is heavily reduced. Lack of cash or less liquidity is the major trigger point for a financial crisis in the market, which is in China is triggered by Evergreen. Another trigger is high levels of bad debt. We all know that China as a country has a debt of 270% over its GDP in 2020. It has reached 290% in 2021. However, the important fact is that most of this is state debt that they owe to local government institutions, so it is manageable within the system. Also, the Communist Party of China is pretty rigid about invoking policies to help the economy, even if it is of extreme nature. In 2015, when the stock market was flooded with money, even though it caused an economic slowdown, it did prevent an economic crash. Similarly, China's statistics are often taken out of context, which might look catastrophic for an outsider. However, in a highly controlled system by the government, many of these issues are in check. Most of the sectors are under centralized control, which makes it easier for the government to take action as they want. The flexibility China has in controlling any crisis in its economy is like none other country. Even the stock market moves are influenced by government agendas. What can happen though is that the global financial stock market can collapse. This is because investors will panic and they will take out the money from assets inside China. And guys, also there will be effect on specific countries who has export relations with China. Those who export commodities into China and has a major export revenue for their country from China's imports will be affected to a good extent. As China's production and factory work reduces, there will be reduction in imports like iron ore, oil and other raw materials. Countries like Australia might have a measurable impact due to reduction of its iron ore exports. Oil exporting countries will have an impact. Another way Chinese economy crash can impact the world is through the Chinese consumer demand. If the electronic production goes down, it would impact countries like Japan, Korea and Philippines. While these are all significant impacts, analysts still say that it is very unlikely that the whole world economy might be affected. So Evergreen crisis would not have a terrible effect on the global economy. Another edging factor for China these days is the energy shortage that the country is actually facing. There are so many reasons which led China to this stage. Increased production works after a big slump due to the pandemic, along with reduced coal usage are some of the major reasons among them. Many of China's provinces are implemented with electricity rationing. The major impact of this is that production works are affected. So supply chain is suffered, which in effect is causing the prices of everyday items to go up. This is causing an inflation situation in China. Many of the electronic companies like Apple, which are dependent on China for its parts, are going to suffer with an increased lag in supply chain. The energy crisis might slow down the economy further. So as we saw, a crash in China can be inevitable. There's a lot which is crushing down their economy. However, the CCP will not let it be a bigger crisis, which can affect the growth of their country. So instead of a huge crash, China might go through a growth slump for some time, while this can have its invariable effects on the world economy as well, which won't be as scary as the global financial crisis. Now guys, if you want to understand how Evergreen can crash the Chinese economy and to what extent, then tap your finger on this video.